Our next panel is something interesting because whenever we talk about fintech, insurtech, this is always about regulations. And Baptiste also mentioned, if you want to do a fully fledged insurtech company, you will need location-based licenses from where you want to operate it. So in terms of talking about regulation, potential incorporation, challenges and investments, I would like to have two different opinions from one Nhi Huynh from Allianz Platform and Acquisitions Manager, and Mathilda Strom from Fintech, Insurtech startup. Mathilda, Nhi, if you can open your cameras. Mathilda, you might have a problem. Let me just help you as well. Welcome, Nhi, by the way.
Thank you, Kaan.
Okay. Yeah, I think, Mathilda, you can now turn on your camera and it's perfect. Sorry, I mean, when we started, you had your camera on, I needed to turn it off. Now everything seems to be perfect. So guys, it's an interesting premise. So I'm just going to leave you to discuss. If you will have more questions and chat happening, I would be happy to drop by at the end of the session. So good luck on your panel.
Thanks very much, Kaan. Thanks for having us. It's a pleasure for me to be here today with all of you and also speak a little bit about Allianz, our portfolio companies, as well as regulation and how in the good, the bad, and the ugly around corporations between insurers or 150-year-old insurers and insurtechs. Just following up on what Kaan and Baptiste have previously said, it's an exciting moment for fintech and insurtechs at this stage, given the level or the global level of funding that we've seen growing in the past. Again, in 2021 now, we've observed that the global fintech funding was reaching the $100 billion USD across Asia Pacific, Europe, and the US, and the same holds true for the insurtech part as well. And I think that makes it exciting because within a couple of last years, we've seen an immense growth of capital flooding into insurtechs, and I think has even been accelerated by the global pandemic that we're living through at the moment. And I think if we want to see a good point from the pandemic, then it's that immense global capital flow into insurtechs and fintechs, helping all of our stakeholders to digitize the industry and to bring a better product to our customers. And as part of that, I think it's important to highlight what the commitment of Allianz Group to digitize our businesses for the benefit of our customers, alongside Allianz France's commitment to the Baptiste outlined. We're also from our side at Allianz, which I'm representing today by way of our emerging markets investments and insurtech investments, which is a 1 billion euro fund with an asset under management of a little above 1.5 billion, which is a significant commitment, and I think also a testament to our board's belief in the future of that industry. And with that, I'd like to talk a little bit about BIMA and introduce you to Mathilda and her story around BIMA and how did that all came along. So as you might know, we are one of the largest investors in BIMA, which is a microinsurance company that's operating mainly in Asia and Africa across 9 different markets, and that's integrating with fintechs as well as providing health tech services for emerging consumers specifically. And on that note, handing over to Mathilda by asking, how did you come to BIMA? How did you decide to join the emerging consumer segment, and what are you trying to achieve with BIMA over the next couple of years?
Thanks a lot, Nhi, and thanks everyone for having me. I'm excited to be able to talk to you and hopefully answer any of your questions. I've heard the chat is open, so I always like to receive questions as we go. Let me start by telling you a little bit about my personal story and then about where BIMA is and why we are where we are today. So first of all, I started 15 years ago in the consulting space and did a lot of work in the mobile space in Africa as part of that. And I saw how powerful the mobile penetration could be for catapulting industries. Banking, music, content was all being driven by these platforms that were created by the mobile operators in those countries. And I saw emerging markets really as a space that was growing and changing and disrupting all industries so quickly that it was really where I wanted to be. And thinking about some of the big trends over the last 20 years and the countries and the industries that are now today very big, but were nothing sort of 20, 30 years ago. For the likes of China, what would you do if 20 years ago today you were sitting in China and deciding you wanted to set up a business that could change the futures of people in China? What if you could ride off of a trend that was going on, like e-commerce, again, 10, 20 years ago? And in this case, I saw this merger of mobile penetration that was this platform for growth for a lot of industries, and fundamentally saw how, and hopefully not too controversial, how an industry was failing to deliver products to the majority of the world's population, especially in emerging markets, an industry like insurance. And that was despite the fact that people in emerging markets probably need it more than people in developed markets, where an illness or a death in the family could send a whole family into poverty and pull kids out of school and really cause a lot of pain. So when we went to try and solve this problem, we looked into somewhere like Africa and said, okay, they have all this opportunity, they have a need. What's stopping traditional insurers from addressing this market? Why aren't they here? And I'll take it from two angles. There was quite a few complex things happening there, but really it was two things. One was there was no real infrastructure to make small payments, like micro payments, which was the only way to really make an insurance product affordable to this kind of customer base who earns a daily wage and can't afford to pay a 12-month premium up front, or even sometimes a monthly premium, and absolutely not the prices that were in the market at the time from those insurers. And secondly, these customers typically, some of them may not even be aware of what insurance is. And if they are, they don't trust insurance to pay claims. And you get very basic questions like, for a life insurance sale, I was in the market in Uganda and I had someone ask me, well, what happens if I don't die? What happens then? And very basic questions that need education, that need somebody speaking to them, explaining why this is useful to them in their lives. And then when somebody comes to wanting to register, you have to help them to register. And even if they are adopters of mobile phones, you actually needed to take that extra step and help them through the registration process for these kind of products. And so our solution there was to bring in our experience from the mobile space and create a way to bill. This was 10 years ago. We were billing over prepaid cards in what you would call nano increments. So we were taking cents or fractions of a cent per day from the person's prepaid wallet. And the policies are actually monthly policies. So a customer doesn't sign up to a 1 year or a 20-year policy. They sign up per month because that's how much they can pay. And we set up our own distribution network of sales associates who were in the field or in call centers who actually spent time educating the customer and helping them to register. And we combined this with technology and oversimplified the product design, really streamlined down to one product, one price point for the whole market. removed as many exclusions as we could, and made it sort of very, very scalable as a result. And today we're in 9 markets and we have 25 million active users. So that's a very long story, but you asked me a short question that has a long story.
Thank you, Mathilda. Hopefully that was helpful for our audience here to understand a bit how different insurance works in emerging consumer markets. Especially, I liked, to highlight the notion that the insurance literacy is one of the crucial parts of your business. It's, I mean, I remember from my own experience that 10 years ago when we did studies around with the basic question, do you know what an insurance product is? Or do you know what insurance is? And we came back with surveys results that said 80% of our survey participants didn't know what insurance is. I think it's quite a good, it's quite a visible sign to show to our audience here what kind of work we've done over the last years together with you, and how much we still have to do together.
Yeah, and I would just sort of add to that, some of you may be asking, like, well, why is this relevant to me if I'm not working in one of these markets where that's the population? I think we can learn a lot from the questions that we get from somebody who's new to insurance, because the new generations that are coming up will be new to insurance as they grow up, and they'll have very different expectations. Those who are as social media savvy, have shorter attention spans, expect a lot of things for free from companies. Those are all similar expectations to one of our classic customers who is approaching insurance for the first time. What do I get if I don't pass away? Why am I paying for something that goes into a black hole? That's actually a very relevant question for all of us to ask ourselves about the insurance industry, and how can we make something more relevant to a customer's day-to-day life.
Absolutely, and I think it's the same sort of questions that we get from first-time insurance buyers, and I think that's pretty much the point where the point that you can reuse in your own ecosystems and companies as well. But maybe to move on from that to the topic of our panel, regulation. Maybe let us touch a bit on, Mathilda, how regulation can help, or what kind of trends you observe in emerging markets from the regulator side. Do they help you in the endeavors? Do they deter you from growing further? Or what is that stance towards insurtechs and driving insurance forward?
Yeah, it's an interesting question, because normally when you speak about regulation, you feel like it's an obstacle, and it definitely can be, and it has been in some cases for us. It's in some cases it's threatened our business when regulators don't really understand the nature of what we're doing, or when they have something else that they're trying to regulate for, and it inadvertently covers something that we're trying to do that's very tangential to their objectives. But it's still worthwhile to think about regulators and regulations as not only obstacles, but there are opportunities in all the things that they are trying to do as well. So when I kind of I'll cover some of the things that we faced, and maybe some tips on how we've managed to make things work for us. But also, as you think about some of these areas, think about them first of all in how do you shore up your business, or your area of work against regulation, but also how can we use that regulation potentially in a positive way. So for example, the positive things at the moment, regulators in emerging markets, it's very different from the EU and the US, where there's mature insurance markets, regulators who have been around as long almost as the insurance companies themselves, to markets where insurance is still very new, and they're trying to feel their way around the market, trying to make sure they protect customers at the same time that they encourage growth of the market. And so one of the things that many regulators in our regions are looking at doing and supporting the industry with is insurance literacy. So they have partnered together with industry. We actually have done a public-private partnership together with Allianz and GIZ, where we've worked with that group and also coordinated with regulators to create campaigns around what is insurance and why is it useful to you. So it can be very beneficial if you're aligned with regulators, and they very much are keen for us to be in the market and to build up insurance penetration where people have not had it before. Typically where you'll find regulators step in is around customer protection, and that can take many forms. So, for us, customer protection, it's a good thing ultimately. It's trying to protect you against stumbling. It means that there are sometimes old ways of doing business are no longer open to you. So, for example, if providing tied insurance where customers aren't aware that they might be also buying an insurance product while they're buying a mortgage or buying a mobile phone contract, that's increasingly not something that regulators are allowing for good reason. Because customers aren't actually typically getting the value from that, but they're paying. Regulators are also concerned about loss ratios, making sure that primarily that customers are getting value for the product that they're paying for. That can, for us, sometimes that has caused problems because for our economics to work, we need to spend time and energy on education. And if we don't do it, then no one's going to be educated. And that costs a bit of money. So there's a bit of upfront cost that needs to be borne by us, and a bit of upfront cost that needs to be borne by the customer to get that service and the hand holding through the process.
I think that's a problem that might not sound like a problem for most of our audience here, to have low loss ratios. But I think that's really where we look at it from a customer-centric view. Do we have value? Do we contribute any value to the customers? Do they know what kind of services they have bought with an insurance product? And that's where the literacy side comes in. And Mathilda, I've seen also the insurance, even in the insurance song that has been created as part of the campaign, which is very rare. We're happy to share that as part of after this chat as well, if someone of you is interested.
Yeah, there's a jingle about it's basically verifying that it's credible if someone comes and tries to sell you insurance that you can pay for over your mobile phone, that it's a genuine product, which is very, very helpful. People have a jingle in their head and they'll remember that. But there's also data protection, right? I think that's an issue across all markets now, and our markets are starting to get there. But there's regulations around what you can collect from a customer, where does it need to be stored, how you can use it, and I don't think I need to tell you guys. I think you have probably more changes in your business from that, but that is an emerging trend. And I guess, as I said, is it an obstacle? Yes, today, but can it be an opportunity potentially? There's also different licensing requirements, which has been, for us navigating that, and also multiple regulators who get involved in our business. And I think as each of you guys evolve into the future state of insurance, and we like to say insurance, the pure definition or traditional definition of insurance is no longer relevant, because a customer isn't just looking to cover their financial needs if something should happen or they should get sick. In our markets, they're looking for the health solution as well. And that means that industry merges into one health provision where your financial risk is covered, but so is your whole health provision. And right now, that means you straddle several different regulators and who all need to collaborate and coordinate. And that becomes extremely difficult because there is typically no hierarchy of regulators. So everyone passes the buck from one player to another. I don't know if you've seen this, Nhi, in any other place, and potentially in Europe somewhere.
I think especially for health techs or health insurance companies offering health services, that comes into play. And I think it's incredibly helpful that as the example you mentioned that we did with GIZ and yourselves, and that we work on together with development agencies or industry bodies to push this topic and to push for a joint regulation of the overall ecosystem rather than insurance as a standalone product. And on that note, I think I'm happy to share a little bit of our insights from Europe as well. They are a bit contrasting compared to what Mathilda just shared with us. I think we've observed pretty much very different lines of thoughts from regulators. Mostly, maybe we'll start with what is probably the regulatory philosophy of European regulators. It's mostly around customer protection, avoiding mis-selling, making sure that any innovation that's coming into the industry is at the end of the day serving the customer. And I think we all stakeholders, including us and Mathilda, would agree with that principle philosophy. But the question is how this is sort of put into action by regulators is very different across countries. And I've brought along 3 different cases from the UK, where you have a quite famous sandboxing approach from the FCA there, the regulator in the UK, that allows both incumbents and insurtechs to test out new approaches. And I think that's very important in terms of a regulatory approach that is not only supporting insurtechs to grow, but also is incentivizing incumbents to come up with innovative approaches as well. And I think the UK is sort of always the best example when it comes to the sandboxing approach. Then moving forward, you have Germany, where the Allianz group is headquartered. You have the BaFin, which has a quite different stance when it comes to insurtech regulation. Our colleagues from the BaFin came up with a new regulation or proposed first notions of a new regulation, saying that insurtechs need to be fully funded prior to be granted, a license, for instance. And I think that's a completely different stance when you think about how the venture capital industry works and how many companies, how many insurtechs are fully funded right from the start. So I think that's really a different approach that we see here. And lastly, what Baptiste mentioned, on the French side, we've seen the French regulator ACPR granting insurance licenses to 4 to 5 insurtechs with the insurance license now throughout the last year. And I think that's a testament of how pushy the government is on in those countries is on insurance innovation topics. And we'll see whether insurance regulation will be a decisive factor for it might be a decisive factor for insurtechs to choose their location. And I think on that note, we can probably move towards Mathilda, some of the challenges maybe that you had in the past, working with either regulators or working with Allianz or other insurance companies.
Yeah, I think with regulators, the key thing has been a lack of understanding of what we're trying to do and how it fits into their neat little box of what they think is a predefined way of achieving their outcomes. That's where you start to face problems. But what typically I think we're fortunate in our markets because the regulators come to us and ask us for advice and want to make sure that they are working together with us typically. So we've been able to, in Ghana, build a relationship, enter a market basically on close inspection with a regulator. And 5 years later, they created a regulation around our business model to allow our type of companies to come in and enter the market, which is great for us. I mean, we weren't worried about that. But it can be challenging when there's a knee-jerk reaction. So I can bring an example of like Tanzania, where we have products that are sold on a recurring subscription basis, and there was something that happened with lenders in Tanzania last year, where a lot of companies were lending money and then sort of snatching back the money as soon as somebody topped up their wallet. And that money was meant to go to school fees or something else, and then it was just all taken by the loan companies, which you could say is probably pretty fair of them to try and recover their loan. But it basically created a knee-jerk reaction where customers then stopped topping up and stopped using and complained. And what the regulator then did as a sort of knee-jerk was like, we're going to stop all kinds of automatic payment, regardless of who is affected by this. And that's the kind of thing you can see. And I think there's a good analogy. Someone told me about Indian regulators. And again, I don't know how much this might apply to some of your regulators or not, but Indian regulators very much in a similar manner will react to big things that flare up, create a regulation around it to try and stop that, but inadvertently cause other problems. And somebody gave me an analogy and said, and they were an Indian person, and said this is very similar to why many Indians don't learn to swim, because in a town or village, potentially one person would have tried to swim and drowned, and then instead of teaching people to swim, they tell people not to swim at all, don't go near the water. And that's the risk with regulators, is that's the effect they can have. And really what you need to do, we found, you need to build a relationship with them and try and explain and help them to understand you're going to make compromises to make sure that they get what they need as well out of it. I can talk through partnerships as well, but did you have anything you wanted to comment on that side before I go into partners, Allianz?
No, not at all. I think it's a very fitting analogy, and it's easy to keep in our heads. So let's hop on, looking at time, let's hop on briefly on partnerships and give an outlook where we think about the future.
Yep. So when it comes to partnerships, that's probably one of the more challenging aspects for insurtechs, because typical insurtechs are going to want to come in the space and need a partner in order to succeed. They probably need an insurance company partner or other a kind of distribution go-to-market partner to make things work. So most insurtechs will probably be dependent on some sort of partnership, and that means you need to have aligned objectives, aligned long-term view, but also aligned commercials with that party, and typically something very new. So with Allianz, or actually with any insurer, we work with others where Allianz isn't. This was a new space. It was a new market that we were underwriting for the first time, where you didn't have any data, right? So there was a big risk on what is the risk rate here for this customer base? What happens if we're wrong? And that creates a lot of risk aversion. As an insurer, understandably, you're all about calculating what the risks are and trying to manage against any unforeseen risks, which means, the price points potentially didn't come out right initially, quite bureaucratic and slow, and you can get stuck in lots of layers, and somebody in Canada or Japan needs to sign something off, depending on the company. And what we've tended to do, where we haven't had a good partner like Allianz who gets this, is we've tended to go for those smaller companies who are more nimble, who can see that long-term view and can say, okay, we're gonna take a bet on this, and we're gonna work together with BIMA to make this happen. And where I've seen it work is in the likes of Allianz, is where you understand what you're trying to get to in the long run, and you kind of portion out that time and space and resource to actually experiment with things and be prepared that it is something that's new and it might not work first time. And some of you insurers, and particularly Allianz, is kind of opening up to that and is good at that.
Yeah, you can imagine what kind of discussions we had at the beginning with our colleagues from Ghana or Tanzania or in across Asia. I think at the beginning, to give it also a bit the Allianz business perspective from our colleagues here, I think at first, usually insurance companies always look at insurtechs as sometimes as sort of competitors, and they are a bit skeptic about this new partner. But I think ultimately, if you have that long-term view that we have at Allianz X together with our colleagues, I think it's ultimately a win-win situation, because as an insurtech, you need the customer base that we have. As an insurer, we have the customer base, but we can't deliver a digital efficient solution and to our customers. And both together we can increase our customer base and have a more satisfying customers. And I think that's something that we would also urge our audience here, to think about.
Yeah, I mean, what you have as an insurance company, you've got a scale, you have a lot more resources and capabilities across your company that any insurtech is going to be able to have in one company. And you probably have more money, right? So you have the opportunity to try things and use all those resources to your advantage when you partner with an insurtech, right? That would be my advice.
Absolutely. Thanks, Mathilda. On maybe aside, our partnership, would you have any thoughts around how regulators or associations or any stakeholders in industry can help to increase insurance access or insurtechs in the emerging markets going forward? As a closing note.
I think regulators need to engage with the industry, right? They need to be open to the new ideas. They need to try and think holistically when they make a regulation. What kind of can this stop? And only in engagement with the industry and hearing the ideas that are coming from all over, and big and small companies, will they be able to sort of start to scope out something that will change the industry for the better. So for regulators, it would be that create much stronger relationships with the industry. For partners, I think as Allianz are doing, embrace the change that's coming and work collaborate with the people who are trying to help change the industry and use what you have to contribute to that.
Thank you, Mathilda. That's a call to action to everyone here. Please reach out to us if you want to join in on that journey and help us driving it forward. And with that, thank you very much, Mathilda. And handing back to Khan for the second panel.
Thank you very much. I mean, I was enjoying the session throughout. I'm also quite interested in Africa. So Mathilda's experience growing over there, it also includes Asia to Pakistan, Nigeria. These countries are growing and the customer demand is definitely different. And you need both sides of the tables. You need resources, knowledge, and the trust. And also you need BIMA's delivery, innovative products who understands the needs of the emerging customers. It's so significant, and world is getting more united than ever. It's much faster right now. So I'm really glad that I had you guys on the panel. I hope that our audiences quite enjoyed as well. Maybe they would like to connect with you. We already shared your LinkedIn information. And thank you guys for joining us.
Thank you very much for having us.
Thank you.